on what are these treasury bills and treasury bonds. So these are usually instruments, more like instruments for which the government or maybe corporates that use to obtain loan from people. So you may find there are those that are offered by the Kenyan government, and sometimes you may find those that are offered by corporates. For instance, I think ABL had one sometimes back, and but mostly the ones that we really interact with a lot are the ones by the government of Kenya. For those, most of us, personally, what I do most is on those by the government. And so to start with the bills, the difference between these bills and bonds. So we have bills are usually short term. I think, was it Jeruth or somebody had mentioned about that? Those for 3 months, the 6 months, and the 1 year. So they are more of short term. Then the bonds we have, they are more of long term, whereby it's between 2 years to 25. Sometimes you may have one goes up to 30 years, but rarely. And so on more on how to start investing in them. So you have to have the CDS account, which you have to before you had to go to the CBK and get all those documents, get the form, fill, go with the ID, the PIN, and you have to fill some forms and then return. But at the moment, I think was it sometimes last month. Sometimes last month we happened to have the CBK launching the app. We have the app that's now the dossiers, those CSD, so you can get in on Play Store and get that app. I think I'll type that for that word, and you can go check it out. So once you get to download it, you just follow the instructions on how to open an account with them. I think it's quite clear on how you can go about it. They just need your PIN certificate, your ID, both the front and the back, and within about 7 days they will have responded. So you can do that through that CSD, and you can bid. You can only bid through that app. You cannot once you bid and they accept your bid, that is when you're informed, and then you can deposit the money through your bank. So you also have to have your bank account, which you have to instruct and tell them to deposit the money. So on the bills, these are the short terms. For these short terms, you have the differences between the two, whereby we have the minimum investment, the return on investment, the period. I think I've already mentioned on that. So on the treasury bills, so we have the minimum investment is 100,000. That is the minimum that you can invest in. The return on investment is usually what you do is once they'll give you a discounted amount. For instance, if it's 100,000, they tell you to deposit 90,000, and so but when they are giving back your money, they'll give it back at 100,000. So whatever you get, that is what your income is for the treasury bills, and they also taxed at 15% withholding tax. That is the interest of the amount that you get. It's not the entire amount that is what you're being paid, the interest of the discounted amount. But we have and then the treasury bills are usually issued on a weekly basis. So once you open an account through those CSD, you're able to get weekly update. You just need to update on the settings that you need to be getting update. So the treasury bills are usually issued on a weekly basis. So every week you're able to get a message on we have this and this treasury bill. So if you like to bid, you're able to bid through that. And another good thing about this is that you're able to roll over. Once maybe you do the 3 months, and you see instead of taking back all your money, you're able to roll over that money to another treasury bill. For the treasury bonds, on the period we talked about, it's between 2 years, they usually long term, 2 years to about 25, sometimes that, which is rare. And then we have the minimum for the fixed, that is the fixed income bonds, usually 50,000. But for the IFB, which is the infrastructure bonds, it's 100,000. And then on the taxation of these You get the infrastructure bond are usually tax free. So you're not taxed for this. The infrastructure bonds are the ones that are used for the development on the infrastructures and all that. Then we also have these the fixed coupon treasury bonds. These ones have their tax, the 15% withholding tax. But if you hold a bond for longer than 15 years, it's 10%. And for the bonds, they usually issued every month. So you're able to get that update on a monthly basis. Yeah. So that's on the bills and bonds. It's more of a nutshell of what happened. So I've not been able. I don't know what's happening to the app. I've tried opening it today and seems it's a bit down. So I wanted to share with you on how it looks like. But seems, let me try again, but seems it's not. I don't know what's happening to it. Seems it's, so this one is a prospectus. So the prospectus has the details about. So this one, the app seems still down. I'm still trying to check on it. So this one is a prospectus. This is what the CPK shares. So with this, they're able to share the details about maybe the bond that they are issuing at that particular time. So they give details on who is the issuer. The issuer who is here, the Republic of Kenya. The amount you don't really need, it's 60 billion, but you don't really have to concern yourself with that. What you need to check most is maybe the coupon rate. For this one, it's market determined. There's some that you'll find the rates at today. If you check, if you have, I think we all have WhatsApp, so you're able to check the rates that they offer you through there. If you go to channels, you'll be able to see CPK. CPK has a channel that they're able to send information on different things, so that the bonds that are there, what was paid, and these details on the prospectus. So we have things like the period date. The coupon rate is market determined for this specific one, so it's based on the market. And then the period of sale, they have defined there within the period which you're able to bid. And the date when you're supposed to pay once the bid is accepted, it's actually there. Mostly it's a day or so after the period is done on which you're supposed to bid. And then these one are the dates when you'll be getting the interest. So you're able to get the interest. For the bonds, you get interests twice in a year. So it's more like after 6 months. So the coupon is usually divided into two. So you're able to get it. Maybe if they have a rate of about 16%, let's say, you're able to get the 16%, but it's divided twice in a year. But you can also, these are the dates when it's offered, when you get your payment, and they're usually very prompt with this. So if they talk about it 13 May, that is when you receive your payment. So for instance, for this one, the AFB, this is the infrastructure bond 1, 2023. It was issued in 2023. Yeah, and it's for 6, I think this is 6.5 years. So this last digit represents the years on which the period. On these dates, this is the dates when you'll be getting the payment. May 2024, November 2025. So you're able to plan. Let's say you put in 100,000 something, so you know you'll be getting a certain date, let's say 16%. So you're sure on 13th May you're going to get your 16 your percentage, not the entire, but divided into twice in a year. You're able to get the amount. So then we have taxation. I talked about the taxation. For the infrastructure bond is tax-free. So this is really a good avenue if you get an infrastructure bond and you're able. And the other thing is you don't really have to invest on this alone. So if you go to those CSB, they usually ask you whether you want to do it yourself, jointly, or as an organization. So you can be able to pool funds as friends. It's more of what I'll say maybe my thinking would be more like what the fund managers may be doing, pooling funds. So even you with your friends can decide now, I may not be able to raise this 100,000, but I have 5 friends and be able to raise this amount and be able to put in this cash to get us this money. So able to get all that. Sometimes we have the infrastructure bond on whereby it's this amortization, whereby you don't have to be okay at the end of the period when maybe for this on 6.5 years you expect to get your full amount, but there are instances on where you're paid not the entire amount that after the 6.5. They may also decide after 5 years you're going to pay maybe at 25%. After that you pay another 25 after that. But by the end of that year, the 6.5 you're able to get all your money. Yeah, that's basically most of the things that you should be aware of. Then whenever you're bidding, do the non-competitive bid. If you do a competitive bid, that means you have to put in a rate, and that one is mostly for guys who are investing like 20 million and such kind of amount. Yeah. So I think that's more on bonds and bills. I think there's more. You can always ask questions on it, and also you can go to the app and get more information on that. I think the app is really nice because you're able to, and it's user friendly. And then also the WhatsApp app, which gives update also on the same on what is happening, on when it's likely to, this is going to be paid, what are the bonds that are likely to be there. I think on the terminologies you may find FXB, which is the fixed coupon treasury bonds. You also have the IFB, the infrastructure bond. So you need also to be aware on what they mean so that you're able to know what exactly you're putting your money in and what is the minimum requirement. Because, for instance, if you put for the treasury bills, which the minimum is 100, and you bid 50,000, then it will not go through. Then the other issue with this, unlike what Jerut has brought on board, for you pulling out is quite it's an issue because you'll not get the payers like as it would be. So if you decide it's a 10-year, just know you need to commit for those 10 years. If you decide to do that, then you're going to get at a lower rate. Then the other thing is you can either buy it, the bonds or the bills, the bonds especially in the primary market or the secondary market. The primary market is when you bid directly, but the secondary market is when now it's a bond that was already there and bid, but now it's being, there are those people maybe who want cash back and that, but now they have, so it's like it has to be so that you receive back your money. So on liquidity, that's an issue. But when it comes to the cash flow, it helps in the advantages would be more on the cash flow. You're able to determine when you're going to get your cash. It's also something nice. I've seen guys who have also tried to use it as more an education policy or such a thing, because you have cash flow. You're able to know this, and this month I can get this money. These are the months I'm supposed to pay my school fees, and so I'll get this amount of cash. So it's something you can plan. And the good thing with this, you're able to, especially the treasury bills, you see it's on a weekly basis, the bonds is on a monthly basis. So you can also be able to plan and invest that every month, you know, there's a passive income coming in. Every month, you know, maybe if your expenses is about 30,000 and you're able to invest money that can bring that 30,000 every month, then you're sorted that you have a passive income that comes in every other month. You don't have to worry about your expenses, they're always sorted. And so it gives even more purchase power, because you're able to get more cash to use to do other things and maybe invest more. And I think because most of us here, I think are young guys, you may not have a lot of commitment, and so we are able, even as much as we talk about the 50-20-30 rule, I believe sometimes we're able to invest more, even more, And I think we have had quite a number of speakers, and all these platforms to invest in are usually quite important to have in your portfolio, because one, you're diversifying and you're able to have different cash streams. It's a money market fund. You also know, you also have an emergency fund. You know, there are certain cash flows coming in at specific times. So that's more on the treasury bills and the bonds. On the rates, so the rates are real estate investment trusts. I think Jeruda had mentioned more on this is on the bit on the fund managers on how they invest in this. But the moment you can also invest on your own on some of this. For instance, we have currently as per now, we check on the capital market and website, and you see that those that are listed so far, I think there was one I saw, there were 3. There was one I saw that, but that one I saw through LinkedIn. I'm not sure whether it's still listed up to now, but as per now, the ones that I know are listed, we have 3 of them, which is one, the Ferrari. We also have the Akon Holdings, which has the I rate and the D rate. So we have 3 types of rates. The first rate is the D rate, that is the Development Real Estate Investment Trust. This is where it's more of an investment vehicle whereby people pool funds and they're able to invest on purchasing properties or assets that are going to bring in income. So, for instance, Akon. So when Akon is, I think most of us maybe have interacted or heard of Kijani and Kwetu Hostels, right? Don't know whether we have heard of the two.
Yeah, sure. Yeah.
So for Kijani, when they're starting to maybe put up those constructions and maybe want to purchase, sometimes they may decide to purchase maybe an apartment. So first is usually through the D-REIT, which is the Development Real Estate Trust, Investment Trust. And so you can invest in that. Then once that is done and now it's income generating, for instance, now we have the Kwetu and the Kijani hostels, which are already bringing in some income. Then they have to transfer it to what we call the income real estate investment trust, which is the second type of rate. So for this one, it's more of investing in an income generating asset. For instance, the Kijani and the Kwetu hostel. So this rent that is gotten from these people is able to be distributed. It's more like share based. Let's say, for instance, how we have the aspect of shares. So you're getting a unit out of the shares you're buying. So it's an easy way of we are not able to, maybe at our age, or maybe the income that you may have at that particular point, you may not be able to put up an apartment. You may not be able to buy a house, but you're able to buy a share of that house, so a part of it, and so you're able to get an income out of it, and so you're able to earn through the income which you get through those dividends that you are paid. So far, like this one, the Akon pays dividends twice a year. They also have the capital appreciation. This is in terms of they may have new assets coming on board. So if they have new assets coming on board, that means their value is also going high, and so you're able to get capital appreciation for that. So you may find you're buying at 20 shillings, maybe in a few months it's at 22. So you're able to get that capital appreciation. So you earn your dividends and you're also able to earn through capital appreciation. And these investments are usually, it's more of a long-term investment. It's not something you want to get in today and in a year you want to get some good returns. So it's more of something you're planning for the next 10 years, and I don't need to invest in this. But in the next 10 years, I know every year I may be getting a certain, maybe it's 100,000, 200,000, 300,000, depending on the investments, depending on how much you want to invest in. So it's more of long term, and it's something you're planning. It's just like how if you do a rental today, don't expect it to return your cash tomorrow or by the end of the year. It's something that is long term. You'll be able to, one thing you're sorting is the cash flow. You're able to get cash flow over time. So there are platforms that people are using today more than the maybe conservative ways of investing back then that you had, maybe to put up your own rentals, and maybe at the moment you're not able to do that. You're able to do this through these platforms. So you can go check out on those. They also have the Fahari, which that was the first one. I think it was licensed sometimes in 2015. The Acon are more recent in 2021. The E-rate and the I-rate was sometimes last year or this year when it was listed. So far we have those three. So you have to be really careful that you don't get one that is not listed and your money disappears. Yeah. So that's more it. And the good thing also, they are tax exempt, except for you just have the 15% withholding as per now. So that helps a lot with maybe tax issues with that. Yeah, I think that's more on the bills, bonds, and rates.